Welcome, tech enthusiasts, to the Tech Stocks Daily Podcast, your go-to source for all the juicy updates and trends in the tech stock world. Google hit the news headlines for a standout upgrade to one of its most popular services, Google Maps, specifically tailored for its Wear OS platform. The tech giant introduced a robust transit feature designed to guide users through public transit directions conveniently from their wrists. This addition to the Wear OS ecosystem enriches the user experience by offering a comprehensive suite of navigation options, including driving, walking, and biking directions, now coupled with public transport details. The feature is neatly integrated with Wear OS Tile, enabling quick access to travel times and alternative routes with just a glance. But Google didn't stop there. Further enhancing Google Maps, the company now displays building entrances for select users, tackling the nuanced challenge of navigating to specific parts of a large building or complex. This move is a clear nod towards Google's commitment to refining user experience and providing pinpoint accuracy in directions, catering especially to business locations. In a broader effort to streamline user interactions with Google Maps across different platforms, the tech behemoth introduced glanceable directions for iOS and Android users. This feature discreetly delivers live ETAs and turn-by-turn navigation on the device's lock screen through system notifications. Additionally, Android Auto users can enjoy an updated interface where estimated drive times are displayed in a bolder font for better readability, aligning with the design language across other platforms. This series of updates underlines Google's overarching aim to dominate the digital map space, a market projected to reach a staggering $73 billion by 2033. As Google bolsters its mapping service, it's not just about keeping users on the right path. It's about cementing its place against formidable competitors like Microsoft and Apple. Both tech giants have made significant strides in this sector, with Microsoft introducing live traffic updates on Bing Maps, and Apple continuously enhancing its Apple Maps services with tools like Apple Business Connect. Alphabet's unabashed push into improving and expanding its Google Maps features represents more than just an update. It's a strategic maneuver to harness the full potential of the burgeoning digital map market while enhancing its Android ecosystem. This move undoubtedly stirs the competitive pot, challenging rivals and setting a new benchmark in digital navigation. Amidst this fervor to innovate and lead, Alphabet's shares have surged by 45.9% in the past year, underscoring the financial fruits of its labor and strategic investment in Google Maps. With the Zacks consensus estimate projecting an 11.7% year-over-year growth in total revenues for 2024, Alphabet is well positioned to continue its trajectory of growth, innovation, and market leadership in the tech space. Nvidia finds itself in the spotlight once more, exhibiting what could only be termed as a technological leap that has the industry buzzing. Firstly, JP Morgan analyst Harlan Sur shed light on a rosy future for Nvidia, thanks to a surge in AI infrastructure investments. According to Sur, data center capital expenditure is expected to grow by 14% in 2023, driven largely by AI infrastructure buildup and data center expansions. This expansion anticipates a whopping $15 billion growth in data center capex. Nvidia, known for its formidable GPU solutions, stands at the forefront of benefiting from this trend. The company is well positioned to tap into the mounting demand for AI applications, essentially pegging Nvidia's GPU business for substantial growth across multiple quarters. Another monumental revelation was the unveiling of Nvidia's GB200 AI superchip, described as a miracle chip by the company. The GB200 is not just another chip off the old block. It represents a colossal stride in computing capability. Clocking in at 1.44 exaflops of AI compute, the GB200 vastly outstrips the DGX-1, Nvidia's earlier supercomputer donation to OpenAI, by more than 8,470 times in terms of computing performance. This quantum leap was not lost on industry titans like Elon Musk, Mark Zuckerberg, and Satya Nadella, all of whom have expressed excitement over the chip's capabilities. These developments underscore a broader narrative of Nvidia not merely riding the wave of the current tech zeitgeist, but shaping the very contours of our AI-driven future. The GB200 superchip, in its sheer computing might, represents a pivotal step in this journey. As AI continues to weave its way deeper into the fabric of tech innovation, Nvidia's pioneering strides in GPU technology and AI infrastructure are setting a blistering pace, planting the company firmly at the heart of the AI revolution. In the realm of ever-evolving technology, Microsoft has taken a definitive leap to cement its status at the forefront of the artificial intelligence revolution. The tech giant made headlines with the strategic acquisition of talent from Inflection AI, aiming to bolster its AI capabilities and consumer products. This move acknowledges the uncertain dynamics with OpenAI and internal calls for a stronger, visionary approach towards consumer AI. Mustafa Suleyman, co-founder of the AI research powerhouse DeepMind, has been appointed as CEO of Microsoft AI, This newly created division is set to oversee consumer AI products, including Microsoft's Copilot AI chatbot and the Bing search engine. Alongside him, Karen Simonian, also from Inflection, will assume the role of chief scientist. This team aims to rejuvenate Microsoft's AI strategy, particularly targeting the consumer sector. This shakeup comes at a critical juncture as Microsoft seeks to challenge Google's dominance in online search. Despite the collaborative efforts with OpenAI, progress has been slow, prompting concerns within Microsoft's board regarding the alignment and future direction with OpenAI. Microsoft's new strategy signals a pivot to diversification in its AI endeavors, focusing on developing its own AI models and reducing reliance on OpenAI for consumer-focused initiatives. Moreover, Microsoft's investment in AI signifies a broader ambition to not just compete, but lead in the transformative landscape of technology and internet services. The hiring of Suleiman and his team from Inflection AI underscores Microsoft's commitment to advancing its AI innovations, betting on Suleiman's proven expertise and vision in artificial intelligence to steer the company's consumer AI products to new heights. This move also reflects a strategic realignment within the company, ensuring dedicated focus and leadership on consumer AI projects. The integration of Inflection's talent and AI models into Microsoft's framework aims to accelerate the development and deployment of AI-driven products and services, keeping Microsoft at the cutting edge of technological innovation in an increasingly competitive market. In the recent news, UiPath, a prominent figure in the field of robotic process automation, made headlines for two distinct reasons: its unusual options activity and its earnings report outshining expectations. Firstly, the unusual options activity surrounding UiPath indicated a notably bearish stance among wealthy investors, with 70% of the trades leaning bearish. This activity was highlighted through a combination of 3 puts amounting to $226,548 and 7 calls totaling $293,000. These trades primarily targeted a price range from $19 to $28 for UiPath over the last 3 months. This focus on UiPath stock options provided crucial insights into the liquidity and interest levels for the company's options at specific strike prices. On a brighter note, UiPath showcased its robust market position and performance through its impressive earnings report. As a leader in the RPA industry, UiPath has developed software robots capable of automating human tasks, such as documentation and form filling. This potential for automation positions UiPath as a key player in a market expected to grow tenfold by 2030. The company recorded non-GAAP earnings per share of 22 cents in Q4, surpassing analysts' expectations by 0.06 cents, with revenue hitting $405 million, 21 million above estimates, manifesting a 31% year-over-year growth. This consistent outperformance has painted UiPath as a reliable compounder for long-term growth. The company has also provided forward guidance of up to $1.56 billion in revenue for its fiscal year 2025, alongside an expectation of $350 million in free cash flow. With a strong net revenue retention rate of 119% in Q4 and a growing customer base, UiPath is well positioned to maintain, if not exceed, its revenue guidance. In summary, UiPath has managed to stand in the limelight for its strategic positioning in the rapidly growing RPA market, its notable earnings report beating analyst expectations, and the unusual options activity indicating a bearish sentiment among investors. These developments frame UiPath as a company with strong potential for long-term growth, despite the mixed sentiments surrounding its immediate market valuation. All right, tech enthusiasts, let's dive into why MicroStrategy made headlines today. Deep-pocketed investors have turned their attention towards MicroStrategy in a big way, showing a markedly bearish tilt. This was uncovered through a keen examination of public options records, highlighting a whopping 213 extraordinary options activities related to MicroStrategy. That's not something you see every day, folks. The split among these high-stakes investors is rather intriguing, with 35% feeling bullish and a significant 64% leaning towards the bearish side. They've been busy with 53 puts and 160 calls, pushing serious money into bets within a price range from $500 to $3,150 for MicroStrategy over the past 3 months. In addition to this wave of options activity, it's worth mentioning how MicroStrategy has been performing in the grand scheme of things. Over the past 15 years, this company has been a stellar performer, outpacing the market with an average annual return of 27.54%. If you had invested a modest $100 in MicroStrategy 15 years ago, that investment would have ballooned to a cool $3,947.85 today. Talk about a growth story. But what does all this activity and historic growth tell us? For starters, the intense options activity could indicate that something significant is on the horizon for MicroStrategy. Whether it's speculation, hedging, or insider insight into upcoming news, it's clear that something has caught the eye of savvy investors. And the historic performance? It's a testament to the power of compounded returns and choosing the right stock for the long haul. So, what do you think is next for MicroStrategy? Is there insider knowledge fueling this surge in options activity, or are investors merely hedging their bets? And how does MicroStrategy's impressive 15-year run shape your view on long-term investment strategies? Drop your thoughts, theories, and predictions in the comments below, and let's get a lively discussion going. The overall market sentiment today appears quite optimistic, characterized by significant technological advancements and strategic moves by industry giants, albeit with a nuanced view on specific companies based on investor activity. Here's a broad stroke. 1. Google is enhancing its user experience with a notable upgrade to Google Maps, indicating a robust strategy to maintain its dominance in the digital map space. This effort shows Google's commitment to innovation and its impact on market leadership in tech. 2. Nvidia is making waves with its AI technology breakthrough, primarily through the introduction of the GB200 AI superchip. This development is backed by a forecast of AI infrastructure investments significantly benefiting Nvidia. Such advancements position Nvidia as a central figure shaping the future of AI and technology. 3. Microsoft has taken bold steps towards reinforcing its position in the AI landscape by incorporating talented individuals from Inflection AI into its team and creating a dedicated Microsoft AI division. This move aims to enhance their AI capabilities and consumer products, marking a strategic pivot towards diversification and innovation in AI-driven products. 4. UiPath showcased a mixed sentiment with notable earnings surpassing expectations and unusual options activity, hinting at a bearish stance among some investors. Despite the investor sentiment, UiPath's performance highlights its strong position and growth potential in the robotic process automation market. 5. MicroStrategy is experiencing heightened attention from investors, with a significant portion showing a bearish inclination as indicated by options activity. However, the company's impressive long-term performance paints a contrasting picture of growth and success, fostering a discussion around its future directions and investment strategies. In summary, the day's market sentiment is predominantly positive, focusing on technological advancements, AI, and strategic expansions. However, investor activities around companies like UiPath and MicroStrategy introduce a layer of caution and anticipation regarding future market movements and corporate developments. Focusing on Nvidia, given today's news, I would lean towards a buy recommendation. Let's dive into the why behind this bullish stance. But remember, always do your own research before making any investment decisions. First off, Nvidia's introduction of the GB200 AI superchip represents not just a technological breakthrough, but a monumental leap in computing capability. This superchip is a game changer, outstripping previous models significantly and showcasing Nvidia's continued leadership in high-performance computing and AI technology. The enthusiasm from industry titans like Elon Musk and Satya Nadella underscores its potential impact and the broad industry recognition of this advancement. Moreover, the investment landscape for Nvidia looks promising, as highlighted by JP Morgan analyst Harlan Sur. The expected surge in AI infrastructure investments and the anticipated 14% growth in data center capital expenditure in 2023 position Nvidia at the forefront of benefiting from these trends. Given Nvidia's strong footing in GPU solutions and AI applications, the company is poised for substantial growth across multiple quarters. In the grand scheme, Nvidia is not just riding the wave of current tech trends, but is actively shaping the future of AI. This positions Nvidia as a cornerstone in the next generation of technology, making it an attractive option for those looking to invest in companies leading the charge in innovation. However, it's crucial to conduct your own due diligence before making any investment decisions. Financial markets can be volatile, and while today's news paints a bright picture for Nvidia, it's important to consider your financial situation, investment goals, and risk tolerance. In summary, given the pivotal developments and Nvidia's central role in AI's future, the stock appears to be a compelling buy option for those looking to capitalize on the next wave of tech advancements. But as always, ensure to balance this with thorough research and consider the broader market context. In conclusion, today's market activity has been buzzing with technological innovations and strategic maneuvers, painting a vibrant picture of the tech sector's future. From Google enhancing its services with Google Maps to Nvidia's groundbreaking AI superchip, companies are not only navigating the current market landscape, but are also setting the pace for tomorrow's innovations. While Microsoft is beefing up its AI capabilities, UiPath and MicroStrategy provide a deeper glimpse into investor sentiments and market dynamics. As we wrap up today's market summary, don't forget to like, subscribe, and share this video with others who appreciate staying on top of the latest in tech and market trends. Make sure to return tomorrow for another insightful video, diving into the ever-evolving world of technology and its impact on the market. Your engagement helps us bring you the most relevant and up-to-date information. So let's keep the conversation going. See you in the next video.